the biggest tech companies on earth, in pursuit of winning in AI, are spending an ungodly amount of money.
Yeah.
We're talking about hundreds of billions of dollars being pumped into building data centers, buying equipment for the AI boom. And these are companies, we're talking about Microsoft, we're talking about Alphabet, which owns Google, we're talking about Meta. These are companies which have made a lot of money from the software boom, and software being one of the best businesses ever devised for printing money. Now these companies are spending tremendous amounts on building out for AI. Now there was concern because when Google reported, or when Alphabet reported their earnings, everything looked relatively good, and their revenue was up across the vast majority of the business, but because they were spending so much money, they recorded the first net cash loss of a quarter for the whole
history.
time. For the whole time they've been a public
Despite
business.
it's quadrupling its profits, so that suggests it's ploughing way more
Correct.
into AI and the prospects of building an AI
Absolutely.
business.
So investors look at that number and they say, look, all the numbers look good, but the money that you're spending is scaring us a little bit.
Okay.
But then days later, Microsoft recorded a very similar result, but because the amount they were spending came in under estimates, investors said, okay, that looks good. Now you might be thinking, I don't understand what the connection is, but the vibe seems to be investors say you need to be spending money responsibly, and we need to have some vision in our head about when this is going to start printing money like your last business did.
I mean, you can take it right back to when you're teaching kids, don't spend beyond your means, right? So this is an idea, is that they're borrowing a lot of money
Correct.
just to build a future-facing business.
Correct.
But I want to know, I mean, these billions of dollars that tech companies are throwing into, and capital that they're throwing into AI, how are they funding all of this?
So they're funding, for some of these businesses, partially through cash flow, but the other part that's scaring investors is that they're borrowing a ton of money for this. Now, companies like Alphabet, companies like Microsoft, they've been funding their own operations for many, many years. So there's also this concern about, you are not just borrowing tons of money, but you are structurally businesses that don't borrow money. You don't need to do it. You're extremely profitable businesses. Now, these companies come back and say, look, the infrastructure requirements for this future boom, what we suspect the economy is going to look like in 5, 10, 20 years, requires us to do this. And it requires us to lever up, borrow a ton of money to get these, to break ground and start building these data centers.
And just so how sustainable is this, do you think? Can it be paid back?
So this is the big question, right, that looms over the entire sector, which is we can see when we look at these earnings that AI is earning money. It's earning a lot of money, actually. But is it earning enough to pay off the tremendous amount of money that's being built on data centers? Now, we've seen this before a little bit in the past in the US, when the companies rushed and built the fiber networks in the late 1990s to build out for the future of the internet. A lot of the companies that built that fiber actually went under and collapsed and didn't see the returns from that. But obviously, it completely changed the world, and the economy is totally different to what it was in the 1990s. We're extremely digitally connected, all the rest of it. So, some investors look at this and say, I can see the vision of this paying off in 5, 10, 15, in 20 years. Is it going to pay off for the companies that are actually spending right now? That's the question.
So when you've got big hedge funds and investors, and even mum and dad retail investors looking at investing in individual shares, not that you're allowed to give any advice, but is all, in order to assess a company, you want to make sure that what you're seeing is what you're getting. Is all the debt that these AI companies are accumulating, are they on the books?
Sometimes yes, sometimes no. So sometimes they're using something called a special purpose vehicle, which is essentially a second company that basically handles all those assets and then leases compute capacity from these data centers back to the companies. Now, the companies will say this is totally legitimate. This is a way that we structure our businesses financially. Obviously, some investors look at that and say, well, SPVs were the thing that brought down Enron, one of the biggest corporate collapses in world history. The difference, I would say, is that was actually covering up fraudulent behaviour, whereas this is, for the building of infrastructure. But, some people look at that and say, where's the transparency? A lot of this is private credit, a lot of this is private lending, not lending from the banks. It's really hard to get your head around. Like, as I said, we're talking about over $1 trillion, trillions of dollars of pipeline sloshing around the world economy. Everything is attached to it. It's not just a tech story. The global economy is sort of hanging off this massive data center build out.
So, James, is this a bubble waiting to burst?
It's a really good question. I don't want to be the guy who says yes or no, because people will go back and look at this interview. But I think it's genuinely up in the air. I think the long-term value is probably clear. That doesn't mean it's not a bubble, though.
And what do you see as the risks to Australia? We know that data centres are coming out here wanting to buy up our land. We know that the government has got legislation that they're looking at in place to regulate all of that.
Yep.
Are there risks to Australia?
Australia is exposed, I think. I don't think we're overly exposed, but we have lots of companies in Australia that are, some of these big hyperscalers looking to build data centres in Australia. It's one of the big economic stories at the moment, and they're obviously exposed. If there is a slowdown in investment, that will follow through to the companies that are trying to build data centres in Australia. So Australia will feel it. We are not as exposed as, the United States or even a country like China to what happens in AI, but, everything is connected now.
Really great of you to join us. Thank you for that, James.
Good to be here.